Navigating Social Security can often feel overwhelming, especially with upcoming changes that could significantly impact your benefits. In 2025, the introduction of Trump's Senior Fairness Act will bring a major adjustment that could increase Social Security payments by as much as $3,455 per month for eligible retirees. This substantial boost will provide much-needed relief, particularly for those in the public sector. If you're nearing retirement or are already receiving Social Security benefits, it's crucial to understand the new rules, how they affect your payments, and the steps you can take to maximize your benefits. The Senior Fairness Act aims to correct long-standing inequities in the Social Security system, focusing on two key provisions that have historically reduced benefits for certain retirees: the Windfall Elimination Provision, WEP, and the Government Pension Offset, GPO. These provisions have impacted many public sector workers, including teachers, firefighters, and police officers, by reducing their Social Security benefits due to pensions from jobs that didn't contribute to the system. Starting in 2025, these provisions will be eliminated, allowing retirees to receive benefits that more accurately reflect their entire work history. This change could result in substantial increases in monthly Social Security payments, with some individuals seeing their benefits rise to $3,455 or even higher. For those eligible under the Senior Fairness Act, the financial impact is significant. By removing penalties like WEP and GPO, the Act ensures that public sector employees receive Social Security payments that better align with their lifetime contributions. This correction addresses an imbalance that unfairly penalized public servants, often leaving them with reduced Social Security checks despite years of dedicated work. To qualify for these enhanced Social Security benefits, there are key eligibility criteria to keep in mind. First, individuals must be at least 65 years old by January 2025, when the adjustments begin. Those who delay retirement until age 70 may receive even higher monthly payments due to delayed retirement credits. This strategy can be beneficial for those in good health who can afford to postpone their benefits. Additionally, individuals must have at least 10 years, 40 quarters, of Social Security covered employment. If your work history includes gaps where Social Security contributions were not made, it's essential to review and correct these records to ensure eligibility. Income thresholds also play a role in determining eligibility. Single filers must have an adjusted gross income, AGI, of less than $75,000, while married couples filing jointly must have a combined AGI of less than $150,000. Retirees should plan accordingly, as exceeding these income limits could disqualify them from receiving increased benefits. If your income fluctuates, working with a financial advisor may help you explore strategies to reduce taxable income, such as contributing to retirement accounts or utilizing eligible deductions. Residency is another factor to consider. The Senior Fairness Act applies to U.S. citizens and legal permanent residents. Retirees living abroad can still qualify but must meet certain reporting requirements, such as submitting proof of life forms and complying with local tax treaties. Staying on top of these requirements is essential to avoid any delays in receiving benefits. There are also special provisions within the Act for individuals with disabilities or limited work history. Disabled workers and caregivers who may not have consistently contributed to Social Security will still be eligible for prorated benefits, ensuring financial support in their retirement years. One of the most significant changes under the Senior Fairness Act is the potential increase in Social Security payments. To illustrate, consider the example of Mary, a retired teacher with 25 years of public service and 15 years of Social Security covered work. Before the Act, Mary's benefits were reduced to just $18 per month due to the WEP. However, after the Act is implemented, her monthly payment increases to $3,200, a remarkable 77% increase. many retirees who had their benefits reduced due to WEP or GPO can expect similar increases. Spousal and survivor benefits will also see significant improvements, providing additional financial security for households relying on these payments. To ensure you receive the enhanced payments, there are several important steps to take. First, verify your work history by logging into your Social Security account to check your earnings record. If there are discrepancies, correct them as soon as possible to avoid delays. Additionally, make sure your income aligns with the eligibility guidelines. If necessary, consult a tax professional to adjust your finances and remain within the qualifying income limits. You will also need to submit required documentation to the Social Security Administration, SSA, including proof of age, marriage, or death certificates if claiming spousal or survivor benefits. Once all necessary paperwork is in order, schedule an appointment with your local SSA office or contact them by phone for further assistance. Most beneficiaries will have their payments adjusted automatically, but it's always a good idea to review your situation with the SSA to ensure no details are overlooked. Understanding these changes, reviewing your eligibility, and taking proactive steps will help you maximize this groundbreaking opportunity. The Senior Fairness Act is an exciting development that could significantly impact your financial future, particularly if you've been affected by WEP or GPO. By eliminating these provisions, the Act levels the playing field and ensures that public servants and their families receive the benefits they've rightfully earned. With these changes taking effect in 2025, now is the time to review your eligibility, update your information, and take the necessary steps to maximize your benefits. This is a crucial opportunity, and being prepared will ensure you can take full advantage of it when the time comes. As the financial landscape evolves, many retirees are looking for ways to secure their futures and maintain a comfortable retirement. Social Security benefits play a critical role in this effort, providing a safety net for millions of Americans. However, provisions like WEP and GPO have long unfairly reduced benefits for public sector employees. With the introduction of the Senior Fairness Act, these penalties will be eliminated, offering long overdue relief to retirees. This legislative change is a major milestone for retirees, particularly those in government positions who have dedicated their careers to serving their communities. The elimination of WEP and GPO ensures that Social Security benefits better reflect the contributions of all workers, particularly public servants who were previously penalized by outdated provisions. The potential $3,455 monthly boost is a game changer for eligible retirees, providing financial stability and the freedom to enjoy their retirement without constant financial concerns. This increase is especially important as the cost of living continues to rise, and retirees face growing healthcare expenses and other financial challenges. However, these increases are not automatic. Retirees must take the necessary steps to ensure they qualify for the enhanced payments. Start by verifying your work history with the SSA and addressing any discrepancies. Ensure your income remains within eligibility limits by consulting with financial professionals. If you live abroad, stay on top of required paperwork to prevent delays in receiving your benefits. The Senior Fairness Act is part of a broader movement to reform the Social Security system and make it more equitable for all workers. While this legislation marks significant progress, further reforms may emerge in the future to strengthen the system even more. As we move toward 2025, it's crucial to stay informed and take proactive steps to secure your financial future. By reviewing your eligibility, verifying your work history, and consulting with the SSA, you can ensure that you're ready to take advantage of these increased payments. This is a pivotal moment for retirees, and acting now will help you secure the benefits you deserve. The removal of WEP and GPO isn't just about financial gain, it's a recognition of the hard work and dedication that millions of retirees have contributed throughout their careers. With these changes, retirees can move forward with confidence, knowing their benefits truly reflect their lifetime of service and contributions. Stay tuned to Wealth Wave for more updates on Social Security, retirement planning, and financial strategies to help you navigate your golden years with confidence.